InvestorIdeas.com podcasts.
Good afternoon and welcome to another episode of InvestorIdeas.com podcasts. In today's podcast, I'm going to be looking at a couple of public company announcements as well as looking at some of this week's financial results similar to how I did last Friday. So today we'll be looking at Medical Marijuana Incorporated trading on the OTC as MJNA, the VLNS Company Incorporated trading on the TSX as VLNS and the OTCQX as VLNCF, as well as financial results from Village Farms International Incorporated trading on the NASDAQ and the TSX as VFF, Cannabis Global Incorporated trading on the TSX as ZENA, the Green Organic Dutchman Holdings Limited trading on the TSX as TGOD and the OTC as TGOD-F, as well as Canopy Rivers Incorporated trading on the TSX as RIV and the OTC as CNPOF. So first starting with Medical Marijuana Incorporated, who announced that the Japanese division of its subsidiary Cannaway has had its best month ever in company history in July of this year. Cannaway has made tremendous progress around the world as consumers in Japan and across Asia continue to show an exciting increase in interest in CBD products, said Medical Marijuana Incorporated CEO Dr. Stuart Titus. Our team has truly shown what can be accomplished with passion, hard work, and high-quality products designed to support the body's crucial endocannabinoid system. Now, according to Prohibition Partners, China and Japan present a large opportunity for Cannaway's unique line of CBD products, as they collectively account for about 90% of Asia's CBD market, projected to be worth about $5.8 billion by 2024. Although Japan is still a new market for us, our record-breaking month in July illustrates that even amid a global pandemic, consumers in the region are already responding to our hemp-based CBD products with great excitement, said Cannaway CEO Blake Schroeder, and I believe we are set up for a continued growth and a vibrant future in the market. So this very much confirms some of the things I've been talking about how you're seeing more and more of these cannabis companies, especially focusing on the CBD sector, start to look at basically the Chinese as well as Japanese and Southeast Asian markets. That is definitely going to be the big next prospective area for cannabis, especially for CBD and health and wellness products. Again, I've seen that from Kawida is looking at that. A lot of different companies are going to be looking at that area for the next couple of years. And I do think that obviously right now, CBD products, you're seeing that tremendous sales record pretty much all across the globe right now. So I do think that for a lot of these companies, that's going to be a smart play for them to either enter into that market or set up some sort of division in the near future. And I do think you're going to see a lot of success come out of that. And there doesn't seem to be any stopping, at least for the CBD market, or slowing down of that. And there is still expectations at some point for medical marijuana, but I don't think that's going to be the bigger play for the Asian markets. Next, looking at the VLNS Company, who announced the rollout of various new products as part of a custom manufacturing agreement with Verse Cannabis, a group of innovators focused on bringing the market cutting-edge product formulations rooted in cannabinoid science. And the new products have been released under each of the two Verse product lines, Verse Originals and Verse Concentrates. Now, there is a sativa-dominant Tropic Lemon 0.3 gram and 1 gram 510 thread vape cartridge, which will be the first launch under the Verse Originals, and a line of universal cannabis products offered at a great value. Now, crafted with botanical terpenes and 0.3 grams value cartridges, they're now available in Alberta, with BC, Ontario, and Saskatchewan expected to follow, along with the launch of a 1 gram value cartridge in the coming weeks in Alberta, BC, and Ontario. As one of the first entries into the Canadian market, the much anticipated Verse 0.5 gram Crumble is now available in Saskatchewan, with the 1 gram offering expected to be available in Alberta, Ontario, and Saskatchewan in the coming weeks under the Verse Concentrates lines of ultra-premium curated collection of concentrates developed with experienced cannabis users at the forefront. Now, precisely created using hydrocarbon extraction, Verse Crumble captures the essence of the indica-dominant White Rhino strain with its high THC potency and aromas and flavors of blueberries and mangoes, green grapes, and Thai basil. Now, the VLNS Company commitment to building out the concentrate category in Canada is furthered by its hydrocarbon extraction capabilities, and through this exclusive extraction process, the delicate makeup of the cannabis plant is maintained, allowing for the original combination of cannabinoids and terpenes to remain in the extracted oil. Canadian cannabis consumers have been eagerly waiting for their next generation products to hit the shelves. In our partnership with Verse, we have come to deliver two unique product lines with both original and reimagined high-quality cannabis extracts and concentrates, said Tyler Robson, the Chief Executive Officer of VLNS Company. Now, together with Verse, we aim to set a new industry standard for accessibility, quality, price point, and value, all of which we have favorably captured through the brand's innovative yet simple product offering that we're confident will meet a wide range of consumer needs. So VLNS Company coming out with new product lines with their Verse Cannabis exclusive deal. The crumble there, I think, will be obviously in pretty high demand. I do also like which provinces they're focusing on right now, entering into Alberta, BC, and Ontario quite quickly. Again, you're starting to see more of this now as more of these producers and product developers have sort of realized where sales are going to be generated faster, and now also that the retail footprint for Canada is a little bit more established and you have more infrastructure in place. You're starting to see again a little bit of a quicker product development phase when it comes to releasing in certain provinces. You're seeing a lot more of these companies focus more on Ontario and BC than they used to in the past, where a lot of these products have been launched in Alberta and Saskatchewan to, I don't want to say negative consumer feedback, but in general, the sales haven't been there as aggressively. And that's just due to the population density and also due to the massive amount of retail licenses that have been granted within those provinces. You're starting to now see that in some cities, again, something I've talked about before, especially when you're looking at major populated cities in Canada, very few licenses granted, whereas again, small rural towns sometimes have up to 10 or 12 licensed retail or cannabis dispensaries. And again, for a population of sometimes only a couple of thousand or maybe even 100,000 tops. And that's becoming the issue within those provinces. And again, within BC and Ontario, you're starting to see the reverse of that, where they are starting to grant licenses in major metropolitan cities. So I do think that obviously VLNS has already sort of dominated the next generation product line within the Canadian cannabis market so far, and I assume they're going to continue to do so. And I also like that they're continuing with their light label production as well as exclusive partnerships like this. So, as well, this week was a big week for financial results, similar to last week. I sort of gave an outline last Friday of which companies we're going to be releasing this week. Obviously, I've already talked about Cannabis Growth as well, but some of the ones that have already released their financial results that I haven't talked about, Village Farms International announced its financial results for the second quarter ended June 30th and had a major non controlling interest of 58.7% in Pure Sun Farms. Now, the second quarter continues to demonstrate the earnings capacity at Pure Sun Farms as it delivered its sixth consecutive quarter of net income and seventh consecutive quarter of positive EBITDA, said Michael DeGiglio, the CEO of Village Farms. Now, although retail branded sales were level compared to the first quarter on a dollar basis, retail sales volume increased 89% as Pure Sun Farms continued to have great success with its large format value offerings, which have consistently ranked among the best-selling dried cannabis products with the Ontario Cannabis Store since launch. Importantly, even with its aggressive pricing strategy, a necessity in Canada to capture share for the illicit market, Pure Sun Farms generated 33% gross margin for the quarter, and we look forward to a stronger back half of 2020 for Pure Sun Farms, supported by continued sales momentum and we have seen earlier in the third quarter. In addition to the new provincial markets, a steady increase in the number of retail stores throughout the country, and the imminent launch of its first Cannabis 2.0 products and bottled oils. We also have seen a major market uptick in activity in the wholesale business recently. So you can find out more information on any of these companies either at CEDAR or at their company websites, or click the links attached in the article. I'm only going to be reading a brief outline of the financial results. But for Village Farms, again, Pure Sun Farms has basically been their main generator, and a lot of the things he's talked about there I have mentioned in the last month as well, talking about Pure Sun Farms' large format product offerings, which have done really well. And Pure Sun Farms as a brand has really started to establish itself both in Ontario and BC and other provinces as well. So I do think that that's going to continue to be their sort of cash cow for them. ZENA Global also announced its financial results for the second quarter ended June 30th, and Kevin Koft, interim chief executive officer of ZENA, stated, "We're pleased to report that the performance improvement measures implemented early in 2020, as well as the introduction of new products and sales channels during 2020, continue to result in improved financial performance for ZENA. Adjusted EBITDA for the second quarter of $3.1 million represents a 31% improvement over the prior quarter, which itself was the first positive EBITDA quarter in the company's history. And additionally, the continuing financial improvements are manifest in the company's cash flows, with cash used in operating activities in the second quarter of 2020 of $3.9 million compared to $14.3 million in the prior quarter and $17 million in the second quarter. Now, finally, the company has made significant strides in reducing its short maturity debt through equity for debt conversions, as well as the equity raise that is successfully completed in June. And current liabilities were reduced from $60.8 million in the quarter of total loans and borrowing, and were reduced in the quarter. Now, the company expects that the increasing provincial demand for its products, driven by more aggressive pricing and the impact of new products together with growth in domestic and international bulk sales channels, will drive revenue, gross margin, and adjusted EBITDA improvements for the balance of 2020 and into 2021. The company anticipates growth in the net cannabis revenue of 44% to 78% in the third quarter of 2020 versus the second quarter of 2020, which is expected to result in consolidated adjusted EBITDA of $4 million to $6 million for the quarter. Cannabis, again, similar sort of discussions as what you're seeing from Village Farms, really for most of these companies. A lot of them have had similar feedback and similar results. And that's also why you're seeing a similar investor sort of reaction to almost all of these financial results. If you look at their last week, almost all of them have a pretty steady rise up until the release of the results, and then a pretty steep decline over the next couple of days following the financial results releases. This really doesn't seem to be based off of anything other than the consistent theme that you're seeing within the cannabis investment market, which is always a bit of a sell-off after any financial results. And I think a lot of investors just use this as an easy excuse, and also because there is an easy ride up to all of these financial results. So this predictability of this pattern is something that's still going to continue to hinder almost all of these companies. It's an unfortunate reality now when you're looking at almost any cannabis related company. If they're releasing their financial results, you can almost guaranteed expect that there's going to be a pretty steady drive all the way up to the day of the release, and then a pretty big sell off the day after or the day of as well. And there's very few companies who have gone away from that pattern. There's only been a few who have had really big upticks after financial results. And a lot of that has been because either they beat expectations or because expectations were so low that people then saw that there was an opportunity, or also because maybe those stocks didn't have the steep rise up because, again, expectations were so lowered. Again, one of the only real positive ones that's come out of all these financial results has been from Scott's Miracle Grow, who saw the big uptick there. Again, that was talked about with my podcast with Matt Markevich. And I do think that, again, you're not really going to see any big booms for any of these companies for quite some time. But hopefully what you are starting to see is, again, predictability and a little bit more stability. And I will say for most of these week's results, they weren't as volatile as what you saw in the last couple of weeks. So it does obviously show that the market has stabilized a little bit, and also that investors have come to realize what's expected with leading up to these financial results and a few days afterwards. So the Green Organic Dutchman also announced its financial results. Since the beginning of the global pandemic, our top priority has been the health and safety of our employees, customers, and patients. Now, despite the additional layer of complexity, we continued bringing innovation to the market, seeing sequential month-over-month growth during the quarter while cutting costs and reducing our cash burn rate. And while we are not where we expected to be this time, we are seeing stronger momentum of our innovative products, and will continue to right-size our business plans with a focus on getting our monthly run rate to scale, which delivers positive operating cash flow by the end of the year. Commented Brian Atide, the CEO of TGOD. Our products have now proven their appeal to consumers and shown consistency and efficacy backed by scientific research. We look forward to expanding our portfolio of additional flower strains and variants of our 2.0 lineup and bringing them to more stores across the country. I've talked a lot about the Green Organic Dutchman in the past. They're a company that I really like the concept, but unfortunately the results are really difficult to look at some of the times. But I do see that over the last couple of months, there's been a few different results that I've talked about, a few different announcements that I've discussed. Some of them are focusing on different product offerings, different price point margins, and really realizing that, unfortunately, they've focused too heavily on this organic advertising that does not connect at all to the consumer demographic yet. There's still no one who goes into a cannabis dispensary specifically looking for organic cannabis, as all of the products are pretty consistent in their style and dryness and potency. So again, you're not really seeing any, other than some of the premium brands and other than some of the really, really low cost brands, you're not seeing too much differentiation between one producer and another. And again, for the organic side of the industry, until that actually turns into something consumers are looking for, it's going to be mostly a waste. But you have started to see now TGOD focusing on next generation product offerings, which I do think will bring them a little bit more momentum. So hopefully they can turn some of their year around. And Canopy Rivers also released its unaudited, condensed interim consolidated financial results and management discussion for the 3 months ended June 30th. This quarter, we made a strategic investment in Dynelio, a cannabis gummies manufacturer that we believe is well positioned to help Canada's licensed producers and brands catch up to consumer demand for the gummy product format, said Narby Alexandrian, President and CEO, Canopy Rivers. We also continue to work closely with our portfolio companies to help resolve some of the unique macroeconomic challenges that emerged outside of the cannabis sector. And while Farmhouse faces some immediate challenges, we continue to believe that it has the potential to become a key component in the Canadian supply chain for low-cost, high-quality cannabis, especially as the value segment of dry flower becomes more prominent. I do think that the Dynelio is going to be probably their biggest sort of deal and that strategic investment that Canopy Rivers has going for them right now. That massive gummy manufacturing plant is going to have a pretty steep impact on the edibles market in Canada, and there is still a massive demand for gummies. You're mainly just seeing the chocolates. Some of the beverages are starting to come out. Still, again, a really low supply of SKUs available for second generation products in Canada. Way more options available in most of the states that have legalized. So until that really catches up, I do think that Dynelio white label gummy manufacturing agreement is going to be a really smart one, and hopefully they can get that operational and making gummies within the next couple of months or this year. And I do think that that'll benefit them a lot. So again, you can look at more information on any of these financial results or look at some of the other ones. There were a few that I missed, some of the smaller companies as well as some of the companies I already discussed last week. But again, all pretty much follow a very similar pattern, lead up and then a hard sell off. That's all for today's podcast. Enjoy the rest of your week. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated's CM certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law. Our site does not possess, distribute, or sell cannabis products.